Hello everyone, John Hyaden here with another daily revision. Let us begin. Before we start, I suggest you stop the video and read the general risk warning. It is very important for your knowledge to understand the risks under trading. Starting as always with upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. Higher volatility is expected today due to the long list of announcements from the US and Europe, affecting pairs such as the dollar, euro, and pound during the day. Starting with the pound, which mainly focuses on the CPI, the Consumer Price Index today, which measures the consumption trends and can affect the inflation. What you need to remember is that a positive number means stronger pound, so trading in favor with the buyers in such case would be a better advice. Later on, US CPI is also taking place. Same thing goes here with the pairs against the dollar and the crude, which I will explain in a bit. US market, surprising day for traders yesterday as the SP 500 went higher by over 1% after last week ended up pretty negative due to different factors such as the interest rate and the attacks on Paris. The only explanation for the positive close yesterday, according to analysts, is the fact that traders are less panicked now from the attacks on Paris. They think it should not affect the global markets, and secondly, the fear from higher interest rate next month is starting to fade away, since the end of the day, the market will get used to the higher rate and trading will stabilize. In conclusion, it is riskier now to choose a side from the longer term. However, the positive data from yesterday definitely gave the buyers some strength, and at least until the end of the week. As you can see it in the graph below, this is the SP 500 daily chart. I thought we might reach the support level here, but a turnover happened yesterday, and we might go back to the trend line over here. Commodities, gold. The surprising day yesterday in Wall Street did not help the gold in reaching its correction. As a matter of fact, the commodity turned over back into the seller zone, which is in control for the past few weeks. The direction now seems pretty negative, but if we use the technical analysis, we can see the graph is exactly on a major support area, which may give the commodity a chance to recover. Moreover, the geopolitical risk linked to the attacks on Paris keeps traders with one eye open to see if the terror will continue or maybe France's attack on Syria will take a step further. In such situation, the economy might get hurt, leading traders to the safe haven called gold. In conclusion, the gold is telling us it is not over until it's over. Today will be a crucial day. If the 1080 level will be broken down, further drops should be seen. However, buyer may surprise us with a possible recovery since we are on a support area. Great trading opportunity on the gold today and tomorrow can be made as the commodity must choose its direction. As you can see it in the graph below, we broke the last support area with the huge rally over here, but we are now sitting on the next support level, which may help the commodity to bounce and recover, at least for the short term. Crude oil, the ongoing attacks on Syria yesterday put oil traders in a positive spot. They speculate in favor with the buyers, thinking the tension on Syria may cause greater prices for oil. However, as the attacks are fading away, investors now continue with the usual worries on global surplus. As analysts always remind us, a meeting of OPEC there and attacks on Syria here will not make a huge change for the commodity. Something else is needed. Thus, for the longer term, the commodity is not expected to rise after we broke the $44 per barrel. One more thing to take in consideration today is the API weekly crude oil. Good data there will make the price drop even more since it will represent the increase on global surplus. In conclusion, although the oil had a great day, the 2% gains may be erased in the next few hours, who knows, maybe after the API, or days. The only thing that could save the commodity now is the poor production number from the weekly API. Thus, pay close attention to the report and trade afterwards. As you can see below, this is the crude oil daily chart. We broke this major support area, which we bounced on almost 5 times with a major rally downward. By yesterday, we got a candle called green ochre outer key reversal, which may tell us we are recovering and moving upward. The only thing that which can help us right now to change the direction upward is the API crude oil. So we will see what's going on over there, and then we will decide. So trade after the announcement. Forex. Trade of the week, the New Zealand dollar, which I talked about yesterday, is working just as planned. Those of you who traded with the sellers, as I mentioned, made a lot of money. Today, same as yesterday, we are still having great opportunities to trade with the pairs, as big drops are ahead of us since both dollar is getting stronger against other currencies and the gold is not showing strength, which is enough for the New Zealand dollars against the US dollar to fall further. As you can see, that from the left you can see yesterday graph. I told you that from here we should see big drops, and you can see the drop downward. And so for those of you who made trades in favor with the sellers, that was a very good way to make some money. That's it for today. If you guys have any question, please contact me on binaryoptionsreview@gmail.com. And I also recommend you visit Ken Davis' blog for further articles and information on binaryoptionsreviews.net. I'll see you again tomorrow.